I want to thank the witnesses. This is something that I've been a strong advocate of because really, after September 11th, we had a disruption in the marketplace, one that wasn't taken care of by the private marketplace, and basically TRIA created market functionality again. And while we would love to see the private sector market fully take care of this, I don't think that, personally, from my perspective, that's still not possible in the world in which we live in. So I want to ask two specific lines of questioning. One is, terrorism is different from other risks in that it involves intentional human actions that target population centers, infrastructure, economic assets, and it's also harder to predict, in part, not only because of the reality of that we don't know when individuals will necessarily pursue those intentions, but even to the extent that we are preparing for it, for the possibilities, there's an understandable interest in keeping information about risks and vulnerabilities confidential in order to reduce the chances of an attack and the potential to inflict damage. So my question for our witnesses is, how do the differences between terrorism and other risks affect private market capacity to insure against terrorism risks? And to the extent that these differences translate to higher costs or reduce availability of insurance against terrorism risk, what are some of the broader consequences for our economy and our society? Anyone? I welcome anyone's answers. Go down the line.
I think we might all comment.
All right, so let's go
Senator
down the line.
Menendez, I'll start perhaps focusing on workers' compensation cover. What would be the potential impact? It's an unusual line of cover in that employers like Marsh & McLennan are required to obtain the cover to protect their employees, and carriers are required to provide the coverage without regard to what the cause of the loss is, whether it's an act of war, an act of terror, arson, whatever is the risk. And what we're seeing potentially in the marketplace is that worker compensation carriers are beginning to pull back those who provide coverage to large amounts of individuals concentrated in areas in New Jersey, in the metropolitan New York area, Chicago, LA, Washington. And so the TRIA backstop is critical to inducing those worker compensation carriers to in fact provide that cover. And if it's not there, if it becomes much more expensive to get workers' compensation coverage, we're concerned that that has a negative drag on economic growth and job creation.
If I could add on to what Mr. Bouchard said, workers' comp is really just sort of the beginning of the issue here. When it comes to terrorism risk, insurers face a unique form of aggregation problem here. Typically, when we think about a large-scale natural disaster, like a hurricane, for example, you're talking about mainly damage associated with wind. It's a property type of damage, business interruption loss, but you don't have large-scale loss of life, such as you had in 9/11. So with respect to terrorism, particularly in the absence of a terrorism risk insurance program, you have insurers modeling in a way that they don't normally have to model for a major catastrophic loss. They are looking not only at the possibility of extraordinarily large property damage and business interruption losses, but they are looking at potentially multi-billion-dollar losses with respect to workers' compensation. So you've got this layer. It's basically many more layers than you would have for traditional losses. That makes the modeling much more difficult. And what it also does is, in effect, requires an insurer to take, say, a map of the area and areas in which it operates, ascertain literally how many dollars it has in risk, not just in terms of insured structures, but insured lives with respect to workers' comp exposure and other types of coverage, and it cannot exceed a certain amount in each one of those areas. So it makes it much more difficult to model. It makes the whole insurance program that it must orchestrate much more difficult.
Well, let me go to another line, if I may, and I'm happy to entertain your answer as well, but I just want to, the time that I have left, you know, Mr. Bouchard, in your 2013 Terrorism Risk Insurance Report, you predict that without a federal backstop, the cost of terrorism insurance would rise for areas with concentrations of people or economic assets, infrastructure such as transportation, pipelines, and other elements. I think of my region that Senator Schumer and I share, just as one example, in a 2-mile stretch just a simple 2-mile stretch of my state, we have the largest container port on the East Coast, the megaport of the East Coast. We have one of the largest and busiest airports in the country at Newark International. We have rail lines, Amtrak, New Jersey Transit, and others, and PATH that carry hundreds of thousands of people back and forth each day to work, and critical industrial infrastructure in the most dangerous 2 miles in America because of the chemical coastline. So while that is a regional reality, the consequences, though, of such an attack are broader to the national economy. Wouldn't that be a fair comment?
Yeah, absolutely, Senator Menendez.
Yeah. Okay.
If I may just add, I think the discussion has been mainly about insurance. At the end of the day, terrorism is a national security issue. And as any government around the world, the question is, how do we create a mechanism that will help the country bounce back after a disaster? And insurance is one way to do it, a very effective way to do it. So let's not see terrorism as something that insurance companies have to cover. They don't have to cover it. We made that a mandatory offer. We as a country, that has been a national decision. I think that's the most effective way to actually price the risk, handle the claims. And we have other programs in this country that don't necessarily rely on private insurance sector, which I think we should learn from some failures as well. So,
Thank you, Mr. Chairman.